Here are my 7 reasons why I like investing in stocks and index funds. I'm also going to tell you exactly how much money you would have to have invested in Apple to make $1,000 a month in dividends. Truly passive income. So at least stick around till reason number 4. Also, I want to know what you think is better: stock appreciation or cash flow from dividends? Let me know in the comments down below. A quick life hack: if you listen to this in 1.5 speed or even 2x speed, I bet you will still be able to understand me pretty much perfect. You'll be able to grasp all the information still, and you'll be able to save yourself some time, and hopefully this video will help you earn some money. Anyway, I just wanted to say that I appreciate all the likes, comments, and follows that help this podcast and YouTube channel grow, so thank you. For those of you that don't know me, my name is Dallin Wardrop, and this is Creating Cashflow, where I share my story of taking my portfolio from $0 to $1 million a month in passive income earnings. By now, you should be listening to this on 1.5 speed or 2x speed. So let's cruise through these 7 reasons why I like investing in stocks and index funds. And be sure, if you have any questions while I'm talking, put them in the comments down below and I'll try and address them later. But the first reason why I love stocks and index funds is it's just so easy. Like, actually, the doing of it takes almost no work. It's as simple as going to one of the mini platforms, which I have a few platforms listed here that I'll tell you about, but going to one of the mini platforms on the App Store or Google Play Store, downloading the app, getting your bank set up, and tapping a few buttons. So it really can't get any easier than that in terms of effort that you actually have to put in. So there's a bunch of platforms that allow you to do this, and as far as I know, they're all super simple. Here's a quick list, but you have Fidelity, E-Trade. E-Trade is actually where I got started back when it cost $10 a trade and $10 a sale. So if you wanted to buy something, you really had to be committed. If you wanted to sell, you had to make sure that you made at least 20 bucks overall over the investment, which seemed like a lot back then. It is still a lot now, because now trading is usually completely free as long as you're using their platform. You have Interactive Brokers, Webull, Merrill Edge, Ally Invest, TradeStation, Zacks Trade, Robinhood, TD Ameritrade. And based on all of my research, it seems that Fidelity is at the top of almost everybody's list as the best platform. I don't use Fidelity, but after making this video and doing all of this research, I'm thinking about looking into Fidelity for me and to really find out why it's the best. The other thing that makes it so easy is that you can buy fractional shares. So I remember back in the day where you had to have enough money to buy an entire share of, say, Apple or Tesla, which those stocks can be pretty expensive. They do splits to make them more affordable, but if it costs $800, you literally needed $800 to buy that share. Now they have fractional shares, and I swear that this came about the same time that cryptocurrency started getting more popular, because I thought it was so cool that you could buy a part of a Bitcoin. You didn't need $9,000 back in the day when there was $9,000. You didn't need $9,000 to buy a Bitcoin. You could invest like $500 and buy part of a Bitcoin. The same thing was true with Ethereum. So I thought that was pretty cool, and I just noticed that come into the stock world about the same time. I don't know if it's correlated or not. I really have no idea. But now if you have $50, you can go buy a partial share of Tesla, which right now is trading at about $300. So it's a really nice way where you can get into the game with partial shares. The other thing is, literally, I used to buy the shares that I wanted to, and then I had to find a cheap stock, like one that cost $3 or $2 that I thought was good, because I would have, I don't know, say $16 left over, and I wanted to have all of my money invested, but I couldn't buy a fractional share. Now you don't have to deal with that. You can just take all of the money that you want and invest it where you want with fractional shares. So that's another thing that makes it super, super easy. And the last thing that I'll mention on the easy piece of it is that all of this can be managed on your phone. So you can go onto a desktop and look at all the graphs and charts and buy and sell, and you can do all of your research on the desktop, but you can just as easily do it on the mobile phone, which is so, I think it's nice. Like, it seems obvious, we probably take it for granted now, but the phone, it's right in your pocket all the time, and it's just easy to buy, sell, transfer money from your bank, transfer money to your bank. You can do everything that you would want to do right from your phone. So one, it's very, very easy. Number two is, from what I found, is that simple strategies work best. So basically, if you keep it boring, that's the best way to do it. I like dollar cost averaging, which just is a simple way of saying you buy stocks at the same time every single week or every single month, and you buy the same one. So you're consistently putting your money in the market. That way you can still take advantage of the growth of the market, but you can also take advantage of when the market is in recession and things are going down. So you're just constantly buying, which averages it all out. And so you're never buying high, you're never buying low, you're just always buying and holding. And over time, because the market grows, the time in the market, the time that your money spends in the market is more valuable than timing the market. So I guess if you knew how to time the market perfectly, that would be a huge skill, a huge life hack. But because I don't know how to, and most people don't know how to time in the market and just putting your money in on a consistent basis, it might be boring and might not be very eventful. And then sitting and holding and thinking about your investment in terms of 10 years, 20 years, 30 years, rather than day trading. It's just simple. It's not stressful. It's easy. So that's another reason why I like it. One, it's easy. Two, simple strategies work best. The third reason why I love stocks and index funds is that specifically for the US market, because I know that other markets are also growing, but I don't follow those markets closely enough to be able to say, oh, I know what's happening in Japan, or I know what's happening in Europe. So I don't invest outside of the US stocks and index funds, which maybe I'm missing out on a few things, but for me, I would rather keep it simple and just know that I believe that the US market is going to continue to grow. Over the past 50 years, the growth has been 11.88%, so about 12% growth over the course of 50 years, which is pretty good, especially since I also looked up the inflation rate, because we're in a heavy inflation year right now. So I'm like, okay, well, 11% growth seems good, but how much did inflation go up? And over 50 years, it went up just under 4%. So you're looking at about, if you calculate in the growth of the market with inflation, it's about an 8% growth overall. So it's still in the positive 8%, which is great. The other thing too is when you put your money in, the stocks appreciate. So even if it doesn't have a high dividend yield, you're able to make more money just from that, which is pretty great. And you obviously can't realize it till you sell it, meaning you don't actually make the money, but the investment continues to grow, and that's what we want. That's what we're looking for. The next is dividends, which is the most passive form of income, in my opinion, that I know of in the world, because literally you don't have to do anything, because as soon as you invest in a specific stock or a specific index fund, they may have a dividend payout. So not all stocks and index funds even have a dividend payout, but before you buy, you're able to look and say, yes, I like the idea of that dividend payout. So the other thing that is kind of interesting, and it's where my question came from at the beginning of this video, is what is more valuable? Do you value appreciation of a stock or index fund, or do you value the cash flow that could be paid out from the dividend? Which I think is super interesting. So the dividend payout is a ratio, and basically it's a ratio of the total amount of dividends paid out to shareholders relative to the net income of the company. It is the percentage of earnings paid to shareholders via dividends. So Apple has a 0.56% dividend yield. So in other words, they pay out about 22 cents, and this is all public knowledge. You can go look all this up online, but they pay out about 22 cents, sometimes 23 cents per share that you own per quarter. So most companies will pay out per quarter with dividends. Some will pay out once a year, and like I said, some don't pay out at all. It just depends, and you can find all that information before you invest. But if you wanted to make $1,000 a month from Apple, you would need to own about 14,000 shares. So 14,000 shares times by your 22 cents is $3,080 per quarter, which would end up being $12,320 or about $1,000 a month per year. So that's what it would take to invest in Apple. And another Vanguard index fund that I really like is VFIAX. They have a dividend yield of 1.5%. So to make $1,000 a month with VFIAX, VFAX, you would need to own between 750 and 800 shares. So obviously the dividend yield payout is much higher, so you don't need to own as many shares. So at today's price, that would cost you about $292,000 to be able to make $1,000 a month. So it's a little less than $300,000 invested in VFIAX will give a payout of $1,000 a month. Where if you wanted the same return on Apple, that would cost you about $2.3 million in shares. So the dividend payout is so much lower with Apple that you have to own $2.3 million worth of Apple to make $1,000 a month. But that being said, the Apple stock is more volatile will have probably a more steady appreciation than VFIAX. So the total appreciation could potentially make up or be even more valuable than investing in VFIAX. It depends on what you value, cash flow or appreciation of the stock. So the fifth reason why I like investing in stocks and index funds is because you don't have to build your own company. I know entrepreneurship is like the sexy thing. Everyone wants to start their own company. Everyone wants to build their own business. Everyone wants to build their own brand. And coming from someone who has built their own business and sold their own business and trying to do that many more times, it takes so much energy, it takes so much work, it takes a ton of sacrifice of saying no to hanging out with friends, hanging out with just doing things. It also takes the investment money. It takes a lot of work, a lot of energy, and a lot of effort. And when you invest in stocks and index funds, it doesn't take any of that. Like I said, it's so easy. You have a simple strategy, you stick to that strategy, and from there, you just have to be patient, live your life, trust the process, and watch your money grow over a long period of time. So essentially, that's one reason why I really like stocks and index funds. And a part of me is like, look, you don't actually need to do anything else. Just take as much money as you humanly possibly can every single month, invest in your stocks, invest in index funds, and eventually that'll start paying you out, and you literally don't have to do anything else. You can you have way more time on your hands to do things that you're more passionate about or things that you love. So that's a reason why I love it. And I know a few people that's their only strategy, because it's not like you're putting all of your eggs in one basket, because you can buy index funds. I'm getting long-winded here, but you can buy index funds that have to do with real estate or have to do with tech. So you're buying essentially a lot of real estate companies, or buying into a lot of companies that make money through real estate or with tech or whatever you're interested in, healthcare. You can just go and invest in those things. So you can invest maybe 20% of your portfolio in healthcare, 20% in tech, and 60% in real estate. Whatever you want to do, you can be in those industries with index funds and stocks. So that's one thing that is awesome, and you don't have to build your own company, which is that I think that's actually a pro. The sixth reason why I like to invest in stocks and index funds is the snowball effect, or the compounding of your money. So it's not like it takes money to make money, but in this case, it will take some money, because you have to have some money to be able to invest. And because, at least in this video, we're not talking about short-term investments and trying to pull out of the market after, like day trading. We're talking about more long-term. So essentially, you're like, hey, I have an extra $100 this month. I don't need it. I won't need it next month, and I won't need it in the next 6 months. So if you don't need it in the next 6 months, then do you actually need it in the next 10 years? Probably not. Let's go and throw it into a stock or an index fund, and let's just be patient, and let's watch that money grow over time. So from there, that will start getting small dividend payouts. So say you buy Apple, you'll start getting very small dividend payouts. And with that money that you made, you can either use that to buy the things that you want, or you can just reinvest that back into Apple So that's where your money truly starts working for you, is your money's just sitting there, and then it gives you money because of the dividend yield. And from there, it just reinvests, and it can compound, and it can grow, and it can grow pretty quickly, especially if you're putting in a little bit of money every single month. I think that over the course of like a 5 to 10 year period, you'll be super surprised at how much it has grown and how big your dividend payouts start to become. So I guess that's one thing that in this channel I've talked about, going from $0 to $1 million a month in passive income. And I guess that's not completely true, because I do have money invested in the stock market and in index funds. I do get dividend payouts from that. It's just not a lot, frankly. I haven't looked up how much it actually ends up being per year, which I should probably do that. But I need to start working that into these videos and into this conversation. But it really does change pretty rapidly. Like, I remember back in the day when I was getting like 43-cent payout from Apple based on how many Apple shares I owned, and the fact that, anyway, not impressive, but now it's much more than that. So it's kind of fun to see that growth. And the last thing that I'll mention, the seventh reason of why I love to invest in stocks and index funds, is there are some tax benefits. So if you haven't heard of a Roth IRA, I highly encourage that you go look into it and learn about it. Also, if you have a job that offers you an HSA, there's huge tax benefits where you can take advantage of the growth of your stocks. So basically, if you don't know what a Roth IRA is, you can essentially pay taxes on your money now. And then if you invest it into a Roth IRA, which in 2022, the most that you can invest into your Roth IRA is $6,000 for the entire year. So essentially, if you put $6,000 of there into your Roth IRA that is already been taxed, then you can invest into stocks and index funds with that $6,000. And as that grows and as that appreciates, you actually don't need to pay taxes on it, and you will never need to pay taxes on it even once you sell it. I have a conspiracy theory that tells me that the government's going to change that rule, and people that took advantage of this are going to get taxed on it anyway. I hope not. And as of right now, the rule is that you won't be taxed on it. So I guess have some faith in the American government that they won't turn their back on their word, and they won't end up taxing that later. But as taxes go, taxes always just get higher and higher and higher. And so even though you may not want to pay taxes now, and you think, well, if I can pay this tax-free in a traditional IRA, but then you have to pay taxes later. And later, you'll probably be in a higher tax bracket in your life. You'll be making more money, so you'll have to pay more taxes on it anyway, even if taxes don't change at all. But the reality is taxes keep going up and up and up, so paying the tax on it now will give you a huge benefit to be able to take advantage of the appreciation and not to pay taxes later. So there's a bunch of rules, like if you're married, how much you can make as a married couple filing jointly, or if you're single, how much you can make as a single person filing your taxes. It's all based on how much money you make from your job. So you could have phased out of this, but for the most part, you can take advantage of this. You can take advantage of this benefit, which I think is pretty cool. And I guess a bonus, which I mentioned with my 7th bullet point, but is the HSA. So if you have an HSA, that's actually money that you can set aside, and it's a health savings account. And I believe that money's not taxed, but you can go and invest it in the stock market, and from there it will grow. So if you're young and healthy, you don't need probably to go and spend money at the hospital or on medications or a lot of things that are going to cost you money later on. So if you have that money invested, it can grow, and then you can use that money in the future for future knee surgeries or shoulder surgeries or whatever that you may run into. So that's another really cool hack. So I guess to wrap all of this up, the reasons why I like investing in the stock market and in index funds is it's just so easy. You can keep your investing strategies super simple. You're actually betting on the US. So you're betting on the US market over a long period of time, which I believe in the US market, and I think that it will continue to grow over the next 50 years and over the course of my life. It's truly passive. Like, you don't have to go wash your car, or you don't have to do anything. It's super, super passive. Your money is able to compound, and there are tax benefits that are pretty amazing, especially if you are just getting started. So all that being said, again, if you have any questions or comments down below, or if you have other reasons why you like investing in stocks and index funds, I would love to hear them. So let me know. And thank you so much for listening and or watching today. And honestly, the easiest way for me to let you know that there are new podcast shows coming out is if you follow or if you subscribe, so that way you can get a notification when I release a new video. And if you are building your own portfolio, I would love to hear from you. Please share your strategy, story, inspiration in the comments down below. Hopefully this community, at the very least, can provide you with some support and encouragement. And with all that being said, remember that the mind is a powerful thing, and what you focus on grows. So stay focused on your goals and stay grounded in gratitude. See ya.